Ms. Schneider is Director of Trading Education and Research for Market Gauge and one of our regular guests. Nice to see you. What's your take on the mood of the markets right now?
Well, some could say that they're incredibly resilient considering all the bad news, but I'd like to give you three very key ratios to look at because I think that's going to tell the story. One is the long bonds relative to how the SPY is doing, or the S&P 500. And right now, the long bonds are outperforming, and that's typically what you would see in a recessionary environment. So that would be very clear if it were just that. But the second ratio we have to look at here is the silver to gold ratio. And right now, we're seeing silver start to outperform gold, which typically is inflationary. So you can say, how can we have recession and inflation at the same time? But that would really be more of a stagflation environment. And then the third ratio would really be looking at the dollar versus the euro, because the dollar's been under a lot of pressure. Today it's had a pop, but if the dollar starts to weaken versus the euro or even the Japanese yen some more, I think that would also be an issue.
And do you think we'd be having some of those same ratios worth flagging if we weren't talking about being here on a Friday, wondering what happens over the weekend with uncertainty in the banking system again?
Well, that's certainly a catalyst, but we've started out this year anticipating some kind of a chaotic situation. We of course said exactly what it would be, but it was pretty obvious that we were seeing things out of control more and more in terms of government spending, just throwing money like they're doing right now at the banks, worldwide, global inflation still really high. And then, of course, the credibility of the central banks, even though they're raising, we can see that it's not really helping in terms of some of the inflationary numbers.
On that note, and I was alluding to, it was kind of interesting looking at the market yesterday, the day after the Fed decided to raise rates, and some people were saying, and they indicated they might be done. I'm thinking Jay Powell seemed to suggest he's ready to keep going, but then what you saw in the market was an early decision on the part of investors to say, no, we think he should be done, and you saw that tug of war playing out. And now, just looking at the market tone, it does look like there are increasing bets that not just a pause could be in play, but a reversal on rates. Now, I know the economists will tell us all the reasons why that might not be the scenario, but when the market is leaning in that direction, what does it tell you?
Well, first of all, he did say consider, and obviously he's under a lot of pressure to start pivoting because the cracks we're seeing in the banking system can be somewhat attributed to the incredible rate of change, how fast rates went up. So pause would be something he might consider, but he's also going to wind up in a really terrible spot if he does that to try to save an economy, which may or may not be able to be saved at this point, in the face of goosing up inflation even more. And I think that's the biggest balance we've got going on right now. And the market may be sniffing these opportunities. But overall, if you look at the macro, that would not be sustainable if we go further into stagflation.
Okay, let's talk about oil. Our audience has lots of questions about energy. There was all this hype coming into the year about it being a great trade or investment for consideration. It's been anything but. Now, obviously, everything changes every day. We know that about the markets. But how do you feel about what you're seeing in the energy market right now?
Well, I think the energy market really is giving us the greatest evidence of some kind of a recessionary environment with the prices going down. But yet there's, again, a contradiction because if you go to the pumps, the gas prices are still high. And even though China demand was supposed to lift the prices, we're also not taking advantage here in the U.S. by buying back our strategic reserves that we were supposed to be doing at these levels. So I'd say that oil may not necessarily be the biggest factor right now. I think natural gas might be bottoming, but I would certainly be keeping my eye on other types of inflationary environments and not necessarily really look at the oil market so much, other than the fact that, Russia obviously is going to keep the production down, and so is the Middle East, but not at any other greater levels, and the demand has to keep up. Recession, it won't.
Mish, nice to have you back with us. Appreciate your insight as always. We'll let you get back to it on a busy Friday morning. Michelle Schneider joining us from Market Gauge.